welcome to my channel Green World Investor. Today I'm back with yet another review of infrastructure fund called the Kotak Infrastructure and Economic Reform Fund. We will take a look at the performance of this fund. Why is it one of the best rated mutual funds in India today? How is Indian market doing on the infra fund? What are the different projects that the government of India is undertaking? How are we as investors going to benefit out of this particular Kotak Infrastructure and Economic Reform Fund? So in this video we will take a look at its features, its advantages, its disadvantages, and how is it unique and different from the other funds, and why I speak so highly about this fund. Here in today we'll take a look at all these questions, and I hope at the end of the video you will gain a better understanding about this fund. So Kotak Infrastructure and Economic Reform Fund is one of the best rated funds in India today, giving returns of around 17.3% in the last 10 years since its inception. Now, one of the good characteristics of a mutual fund is not only giving good returns over a certain period of time, but also preventing drawdowns of the fund in case of any fall in the stock market. So the fund should be designed in a way so that the investors' interests are not lost. So even if the market is volatile and the market is down, how can a fund outshine itself so that investors' interests are safeguarded? So Kotak Infrastructure and Economic Reform Fund is the answer to all these questions, because not only has it given good returns over the last 10 years, but also shown good performance in case of market crashing or declining sharply. So yes, you can see all these features coming out of the Kotak fund in its last decadal existence. Now India is going through a golden era of reforms. Yes, we are seeing a lot of investments in the infrastructure area in our country, in road, rails, as well as in real estate, and also India is making the industrial sector lucrative by lowering the tax rate, and also making the investments here attractive by introducing the PLI scheme. So this has led to a boom in the infrastructure, not only on the government level but also by corporates, and in sharp contrast to the gloomy global outlook that we hear about. In our country we are seeing a boom other than the gloom. So India is undertaking such investments, such huge projects to strengthen our infrastructure base as of now. So now how can we as investors benefit out of this boom story? Yes, by investing in funds like Kotak Infra and Economic Reform Funds, we can benefit out of the fastest growing India's fastest growing economic story as compared to the gloomy global outlook. So now let's take a look at the different features of Kotak Infra and Economic Reform Fund before delving into its performance over different timelines. So first let's take a look at the allocation. So the allocation is quite diversified which is a good feature, because you can see that the fund has around 27 to 35% of its allocation in small cap, mid cap, as well as large cap companies. So yeah, the fund is very well diversified if you see through market caps with 27 to 35% each in all these small, mid, as well as large cap companies. Now coming to the sectoral diversification. So the highest allocation of about 22% is towards capital goods, then followed by energy at 15%, and then we have materials as well as construction. So if you see, the sectoral allocation is very apt for this fund because it's an infra fund. It is investing into capital goods, it is investing into energy, materials, construction, as opposed to some funds which are highly concentrated in just one or two sectors like ICICI Commodities. If you are interested, you can look at the video. The link is flashing on your screen above. Now what I also liked about this fund is that it is not only investing into bigger popular names, but it is also doing its research and looking at good small infra companies. For example, Rolex Rings, FG Infra, Ratnamani Metals and Tubes. So this shows that the fund manager and its team are looking for good growth companies even in the small caps space, as unlike many other funds which just concentrate in bigger names in the large cap space. So here you can see a good mix of small cap funds also making a prominent existence in the overall allocation. Now it also has airline stocks, cement stocks, electrical, auto, industrial stocks, which is a good play on India's growth story. Not just the fund is not just concentrating on the hardcore infra comprising of power or capital goods, material or construction. It is taking the overall growth in India's story, and which is evident by the fund's investment in other sectors also, like the airline stocks or the cement, electrical or industrial sectors. So now let's take a look at the overall returns of this fund over the different timelines. So as we have already seen, the fund has returned around 17% in the last 10 years. But if you see the recent performance, in the last year itself, the fund returned around 33%. In the last 3 years, the returns were around 40%. So why? Because the fund is nicely replicating the huge spending, the huge infra spends that are happening in our country, and replicating the good performance in the capital goods and industrial companies in their revenues and earnings. You can see a spike in the revenues and earnings because of so much is happening in our country in this space. So the fund has managed to tide the infrastructure wave well and given us good returns over the past, and it has also handily beaten down several other funds that are operating in this sector in our country as of now. Now let's take a look at the size of the fund. So the fund size is around 800 crores, which is neither too high nor too less. However, I expected that the size of the fund could have been larger given the highly large capital intensive sector that the fund is investing into. But as we have already seen that the fund is nicely diversified, 27 to 35% in large, small and mid cap companies. So the fund's average size is around 800 crores as of now. Now let's take a look at the expense ratio. Expense ratio is around 0.96% if you go through the direct growth plan, and if you go through a regular plan, it comes to 2.32%. So as I've always said, that try and make an investment through the direct way and not through regular plans, because in this case you will save a lot on the expense ratio. So you can see the difference of 0.96, which is so cheap as compared to 2.32% if you go in a regular plan. So for all your mutual fund investments, try and go through the direct way. And nowadays it is so easy to invest online that you do not need any other distributor or broker for the same. So you can do it online and you can save around 1% or even more than 1% in certain cases on expense ratios. Now let's take a look at the portfolio churn, the portfolio turnover of this fund. So the portfolio turnover of this fund is very low at just 12%. Why? What does it show? It is one of the highlights of the fund, and it's really caught my eye, as it is taking a long-term view of the overall portfolio, and it is not churning stocks like regularly. Now this will save high brokerage cost as well as transaction charges, because the fund is very nicely devised and it's well thought of, and hence the portfolio turnover is quite low. So over the long run, if you see, it is going to save you on your brokerage as well as other transaction charges. So a low portfolio churn is a positive in this case. Now category average is generally around 140%, which shows huge advantage of this fund. If you compare it to its peers, if you compare it to the industry average, you see it's around 140%. That is like more than 10 times of what this fund is offering. So it is a very good churn at around now let's take a look at the most interesting part of this fund. So there are a lot of positives that we could find in this fund, like we saw that the expense ratio is very low, the churn is very low, we saw that it is very well diversified across different market caps of the stock market, and also we have seen that it is very well, it has a good sectoral allocation as well. Now the other interesting thing that I liked about this particular fund is that its selection of stocks is very nice. So the largest holding of this fund is L&T, followed by Ultratech and Bharti. It also has good exposure towards energy stocks like Reliance and Indraprastha Gas, which is at number 4 and number 5. The fund also has a good exposure towards other capital goods stocks like Thermax and Bosch, which is again a good positive because it is considering the overall infra picture in our country. Like in most infra funds, we haven't found a good exposure towards energy sector, but this fund takes care of that and has a good exposure towards energy sector as well, as is evident by Reliance and Indraprastha occupying the 4th and 5th position in the overall portfolio. Now overall, if we see, the fund has around 44 stocks under its holding, which is a good average if we consider the other the subsectors of infra under which this fund invests into. So 44 stocks in all, with largest holding in L&T and Ultratech, followed by energy stocks like Reliance and Indraprastha, and then we have capital goods stocks like Thermax and Bosch. Now let's take a look at the other features of this fund. So the fund Sharpe ratio is around 1.85, which indicates good performance, having very less or low risks are involved. The beta as well as the volatility of this fund is also average. Now the fund has managed to do well as it has very high quality stocks under its portfolio, which has led to the outperformance in my view, with good corporate governance. If you can see, all the stocks are very well, are good company stocks, they are well governed stocks, and hence you can see the performance also in the fund's overall performance, its outperformance, how it has outperformed the other funds, other peers that are trading currently in the Indian space. Now, in closing, I would like to say that there was almost no negative that I could find in this stock. You see the expense ratio, the Sharpe ratio, the fund allocations, the selection of stocks, the nicely diversified sectoral allocation. So all of these are good positives, and the fund has taken into account not only the larger, bigger companies, but it's also looking at high growth small cap companies in this space, which hats off to the fund manager as well as his team, that his or her team, who are doing a good job in this area. So there was almost no negative that I could find in this fund, except that the valuation of the stocks is very high, but that we cannot do anything because of the exuberance of the Indian stock market currently, as well as the highly valued infrastructure sector in our country as of now. So I do not think that's a problem with the fund per se, because it's a general story, and I think that it is one of the best managed, best run infra sector fund in my view, if not sectoral funds in the Indian market. So that was all from my side. Let me just tell you, I'm not a SEBI registered advisor. For all your investment purpose need, you should meet an RIA. This video was made only for the purpose of education. So that was all from my side. I hope to see you again. I hope you liked my video. If you liked it, please like the video, subscribe to my channel, so share it with others. I will see you again. Bye, and have a very nice day.